students, or good morning, good whenever you're watching this video. Mukta here again to continue with your taxation. Okay, in our last class we had looked at employment income, correct? We had looked at employment income. We had seen what makes employment different from self-employment. Okay, what employment, the nature of service, nature of contract is of service, whereas self-employment, the nature of contract is for service. Okay, now when we're learning about employment income, we only consider employment, the income that you're getting from employment. Self-employment, it's assessable under a different section of taxation itself. In this chapter, we'll be looking only at employment. In exam, you'll rarely find questions where they will ask you to distinguish between employment and self-employment, so don't worry. But what you do need to remember are these factors, the factors that make employment different from self-employment. Mutuality of, we had looked at mutuality of obligations, control on method of work, benefits, basis of payment, and etc. Right? Now, self-employment is any income that you're getting from your own trade, vocation, or profession. What does that mean? For example, you have your own clinic. If you have your own clinic, or if you have your own bakery, that you're running your own organization, or you have your own company as a self-employed person, right? You have your own, let's say, clinic, you have your own academy, okay? Maybe you have your own CA firm, right? All of those profits that you're getting, the profits, losses, all of those things, they come under self-employment. But employment is when you are hired by someone. Simple distinguishing. Right? Simple difference. All of this will come under trading income under self-employment, which we will learn in a different chapter. Okay. The reason why this difference is important is because NIC's PAYE and other expenses have different rules that we have to look at later. But in this chapter, we'll be looking at employment income. All of these factors came from statute and case laws, and in case of the absence of a written contract, at that time we look at these factors. But no one factor is conclusive. We have to look at the overall picture. Now, when we're learning about how to calculate employment income, there are multiple sections in this. Multiple sections. It's a very huge chapter, and there are multiple sections that you have to take care of. Okay? The first one being salary, bonus or commission, right? For example, you're doing really well, you get a bonus for that year, or the company is doing really well, you get a share of the profits, right? All of those come under bonuses. If you are in sales, you will have a basic salary. For example, you are earning 15,000 per month. You are earning 15,000 per month, right? And then for every sale you make, you will get a commission. That also comes under your employment income. Any kind of benefits that you're getting, they also come under employment income. Reimbursement, you paid some expenses and you're getting reimbursed for medical reimbursement, or car travel reimbursement, food reimbursement, that kind of stuff. And you have cash vouchers as well. All of this will come under employment income. Then we have those deductions that can be, subtracted from your employment income. Okay. The first one is expenses incurred wholly, exclusively, and necessarily in the performance of duties. Contribution towards employer's occupational pension scheme. We had looked at the two types of pension schemes, occupational and personal. In the pension chapter, we looked more into detail how to actually calculate pension, what is the difference between occupational and personal pension. What you need to know is anything that you contribute towards employer's occupational pension scheme. That is, your company is providing a pension program. If your company is providing a pension program and they automatically enroll you into that, from your salary also you contribute a little towards your own pension in that employer's occupational pension scheme. Don't worry, if you are employed by that person, you still have the option to opt out of it. It is not compulsory that you have to go through employer's occupational pension scheme. So, if you're opted in and you contribute a little bit of money towards employer's occupational pension scheme, that is an allowable deduction. You can deduct it from your salary, whatever income that you're getting. Okay? That being said, Next, if you look at subscription to professional bodies, you're an ACCA member. Now, you're not an ACCA member, but you are enrolled into that professional body. ACCA is a professional body. ICAI is a professional body if you are learning CA. IMA is a professional body if you're doing CMA or CPA, right? You have to every year you have to pay a certain amount of subscription in order to maintain your membership. Any subscription that you're paying to professional bodies, and one more thing you have to remember is that it should be relevant to your work. Okay, you're doing ACCA, but your job is in sales. It doesn't match, right? You're an ACCA. If you're doing a financial analyst job or an auditor job or a tax analyst, those kind of relevant jobs, right? Then this becomes relevant, subscription to professional bodies, as long as it's relevant to your work, as long as it contributes towards your performance of duties. But you are subscribing to ACCA body, but you are doing like a marketing job or a sales job, okay? Or you're doing a completely different thing. You own a clinic, all right? A dental clinic, for example. It doesn't match. Whatever subscription you're paying to ACCA, that's for your finance skills. But if you are employed in a dental clinic or a hospital or in sales or marketing, things that are not related to that professional body ka examinations, then this doesn't count. It is not an allowable deduction. It will be given in the question. It will be directly given in the question if it's relevant or not. Okay. Then you have charitable donations. Like I said, if you at the end of the month, right, you have finished all of your expenses, but you still want to make that contribution, you can directly tell the employer, cut it from my salary and give it directly to the charitable institution. That's called payroll deduction scheme. We'll be looking at it in a much more detail. Then you have travel and subsistence expenses, right? And when you use your own car, you will use your HMRC mileage allowance, which will be given in the exam. All of this concludes your employment income. The reason why this chapter is really big is because we look at each of these elements in detail. Each of these elements have its own rules. Then shall we start? We'll start with salary, right? We'll start with income, the primary income that you're getting. That is your salary. Now, when it comes to salary, there's one thing you need to learn. One thing that's super important you need to remember. That is, when it is actually assessed, what earnings and to what timeline that earnings are actually assessed. The first thing you need to remember is the date of receipt. Receipt being whenever you receive, right? Whenever you receive the income, whenever you get your salary, the date of receipt is earlier of two things. First is actual payment, the day when you actually get paid, actual payment of earnings, or becoming entitled to such payment. Or in simpler words, if I have to say, earlier of when earnings become due. When you get the right to receive the earnings, but you still did not receive it. For example, the reason why the salary part, the timing is very important is it is assessed on a receipts basis. Okay, during the tax year, that is 6th April 2025 to 5th April 2026. The reason why it's important is that during this time, whatever salary you have received, right? Whatever salary you have received, that is accessible to tax. Whatever salary you received during the tax year, that is on a receipts basis. That's why it's important. You need to know the timing of when you receive the salary. The date of receipt, that is the day when you actually receive the income, that is for assessing the tax, for assessing employment income, the date of receipt is earlier of, that is between these two, the earliest date. Okay, the first one is when you actually receive the earnings in cash, when that amount is actually deducted and it's credited to your account. Okay, actual payment of earnings, or when you become entitled to receive, that is when you earn the right to receive that amount, that is when earnings become due, that is when you have to receive the salary but maybe due to some delay that you did not receive. So when you're assessing salary, it is important you keep in mind the date. For example, I am supposed to receive, I am supposed to receive earnings by midnight of 6th April. Let's just say 6th April, I'm supposed to, let's say 6th of every month. Okay, and now it's May. So let's say 6th May I was supposed to receive. 6th May 2026. I'm supposed to receive my salary on 6th May 2026. Let's say due to certain events, right, due to certain delays, it got credited on 8th May 2026. Or let's just say that, you know what, they were like, you joined like in the middle of the month, I will credit it after 2 months, right? So let's say instead of May, I got on 6th June. So this is actual, right? This is when I actually received the payment. When did I become entitled to receive the payment? When am I supposed to receive the payment? When were earnings actually due? 6th May 2026. So when you're calculating salary for your taxation purposes, the date of receipt is earlier of these two, when you actually receive the payment and when earnings become due. So out of these two dates, the earliest date is chosen, May 2026, not June. For example, they had given me advance payment. Let's just say that, hey, you're traveling a lot, you're traveling to Chennai, you're traveling to Coimbatore for work. So I'll give you an advance payment. So instead of 6th April or 6th May, they had actually, this is due amount. This is when they were supposed to pay. But they paid a little bit early. Let's say they had paid on 6th April. Yeah, like 2 months ka salary, I'll give it now only. So when are you supposed to take this? What date are you supposed to take? The earlier of these two. So what is the earlier of these two? April comes before May. So this one. Alright, this part is important. Now, another thing that you need to remember is that this is for normal employees. This is for normal employees, people who are working as proper employees in the organization. So let's just write this is for employees. But for directors, there are special rules. Don't worry, it's not going to be that complicated. It's just that instead of 2 dates, we have 4 dates, 3 or 4 dates. Okay, so directors. This is for normal employees. If you are a director, the thing is, why directors have a separate rule compared to employees? Because first of all, they have a high power in the organization. So, what happens if you have power? You can manipulate the timing of earnings. So what actually happens here is, because you're a director, you have a high positional power in the organization to manipulate the timing of your own earnings. Alright, so what's going to happen here, if you choose the earlier date, if you use these dates, you can actually delay or you can actually pay yourself in advance. If you pay yourself in advance, you will have to incur more tax. If you pay later, you will get to know this as we finish the chapter, that when you manipulate it, you evade tax. That's the problem. You evade tax by manipulating the dates. So what did they do? Directors, they have been given separate dates. For directors, where you are in a position to manipulate the timing of when you get earnings or when earnings is actually due, you have special rules. Let's look at what the rules are. Here, the date of receipt I'm zooming in a lot, haven't I? The date of receipt is earlier date itself, but not just these two. First, when sums of account sums on account of earnings is credited in company accounts Okay, the first one is sums on account of earnings is credited in the company account, where in the company's accounting books, in the company's books of account, that is their journals, their ledgers, right? In those books, if it's actually credited in the company account on that date, okay? Sums on account of earnings basically mean that the amount. Sum basically means what? Amount, right? On account of earnings, due to earnings, the sum. This is just a complicated way of saying the amount of earnings, okay? Sum on account of earnings basically means what? Amount of earnings. But you need to remember the keywords. Sums on account of earnings is credited in the company account, where in the company's books, in the company's accounts, company's Microsoft Excel or Tally or QuickBooks, whatever they're using, where in the company's ledger and journal entries, the sums on the amount is credited in the company's account. Then that date, that particular date of recording it, and then we have where earnings are determined. First is this date, okay? Second is where earnings are determined. Again, here we have two sub points. If earnings are determined, that is when earnings are calculated before the end of period of account. Period of account is what? The timing from when? From the start of the year, start of the company year, start of the accounting year to end of the accounting year. That is period of account. In UK terms, we use that. This is what we call as accounting year. The period for which we are calculating the transactions, we are recording entries, we are creating financial statements. That is period of account. So, if earnings are determined before the period of account ends, then the end of that period. When we look at a question, it will make much more sense. But, for example, the period of account is from, let's say, 31st March. Okay? 31st of March and 1st of April. 1st April to 31st March. Let's say our accounting year, that is period of account, is this 31st March to 1st April. Let's say you are the director. You are the director and the earnings have been determined before the end of the period of account, that is before 1st April. Let's put it like this. Okay, let's say the period of account is 1st April to 31st March. Let's say period of account can be anything. Whatever the company chooses as period of account is the period of account. It can be for 1 year, it can be for 6 months, it can also be for 3 months, it can be for 1.5 year period of account. Whatever they want, they can choose. Let's say the period of account for this particular company is 1st April to 31st March. You are the director. Let's say your earnings of 6 lakh, or since we are in the UK, 600,000 pounds, have been determined before 31st March. If your earnings have been determined before the period of account of 31st March, then 31st March is that point, is this point. This is the date. Okay. Let's say your earnings have been determined after the period of account, after the end of period of account. So what's going to happen? Let's say 1st April to 31st March, 1st April 2025 to 31st March 2026. Let's say your earnings have been determined in 30 June 26. Now, your earnings have been determined after the end of account. So, in that case, date earnings are determined. It seems complicated, but it's actually not. Let's give one example. Okay? Let's give a nice little example. Now, what's going to happen here? Let's look at it. Okay? Let's say the period of account is 31st March 2025 to 1st April 2026. This is company XYZ. Okay? This is your period of account. Now, let's say your earnings, you are the director. Let's say your earnings have been determined on 30th June 2025. Okay? And your earnings have been credited on 1st July 2026. Okay? Now, what's gonna happen? You are a director. That is, you have high power in the organization to manipulate the timing of earnings. That time, the date of receipt is the earlier of, first of all, when the amount is credited in the company account. When was it credited? On first actual credit, 1st July 2026. Now, where are the earnings determined? When the earnings are determined. Okay. Now, here when you're solving the question, you first write this entire thing and then you write the date right next to it. Now, what's going to happen here? This is the 30th June. Earnings are determined. Okay. This is the actual credit. This is the earnings when the earnings are determined. Now, write this entire thing first. The date of receipt is the earlier of first one. What is this date? Sums on account of earnings is credited in the company. When was it credited in the company as per question? 1st July 2026. Okay. Now, let's see the next one. If earnings are determined before the end of the period, then the end of that period, or if earnings are determined after the end of that period of account, then the date the earnings are determined. Okay. Now, this is the period of account 31st March to 1st April. Now, can you tell me, is this 30th June 2025, is it determined? This is the date earnings are determined, right? Now, can you tell me, does this 30th June 2025 arise before the end of period of account or after the end of period of account? Before the end of period of account. 31st March, April, May, June. It's between, right? 30th June 2025 is before the end of period of account. If earnings are determined before the end of period of account, which is the case, then the end of that period. The end of that period of account. What is that end of period of account? 1st April 2026. Cool? Now, if it's after the end of the period of account, that's not the case, then the actual date the earnings are determined. For example, the date where earnings are determined was 30th June 2026. Then you have to enter 30th June 2026. Alright, so that's how you're supposed to do. Now, what is the earliest of these two dates? July will come first or April will come first? April will come first. So, then this will be considered the actual date of receipt. This is considered the actual date of receipt for taxation purposes. Let's look at another one. Let's say your earnings have been determined, this was 2025, right? Let's say your earnings have been determined on 30th June 2026. Earnings are determined. 1st July, let's just say the actual date of credit is 1st July 2026. Actual credit. The date when it was actually credited in the company's books. Okay? Actual credit. So, what is going to be the earliest date of these two? If earnings are determined before the period of account end, before the end of period of account, then it is the end of that period. Now, can you tell me, is this before the end of period of account or after the end of period of account? After, clearly, right? Because it ends on 1st April 2026. April, May, June. It is after the end of period of account. Then you have to consider this particular date. The date the earnings are determined. What is the date the earnings were determined? 30th June 2026. So you're going to write 30th June 2026. And when is it actually credited? 1st July 2026. So, based on this, can you tell me what is the earliest date? 30th June. this will be considered your date of receipt. I hope this is clear. You just have to keep the dates in mind. There's nothing else to do. Okay. After that, when it comes to salary, the timing is very important. You need to remember the timing. Is it first of all, are you an employee? If you're an employee, then the date of receipt is the earlier of the actual payment or when the payment is due. If you're a director, then you have higher power. That's why we have additional rules. The date of receipt is earlier of, first of all, when the amount is actually credited in the company's accounts, in the books of accounts. And if the earnings are determined before the end of the period of account, then the end of that period. If it's determined after the end of period of account, then the date the earnings are actually determined. You had looked at certain examples. You just have to do that. Alright. Now that is the end of salary. That's the only thing you need to remember from salary. Okay. Let's now look at allowable deductions. In fact, let's look at this part of allowable deductions. Expenses incurred wholly, exclusively and necessarily in performance of employment duties. That is, as long as you're employed, any expenses that you incurred to carry out your duties in the organization, that is an allowable deduction. Now, when it comes to that particular item in the employment income, one thing, there are three elements you need to remember in the definition itself. Okay. Now, let's just copy that line first and really drill it into our head. What are we going to do here? Expenses that are wholly, exclusively and necessarily incurred in performing your duties, in performance of employment duties. This is the key aspect of what makes that particular expense an allowable deduction for taxation purposes. Now, there are three elements you need to remember. First is wholly and exclusively. It is part of the definition itself. The second point is necessarily. This is one point. Necessarily is one point. Lastly, performance of duties. Now, let's explain this with a simple example. Okay? What is wholly and exclusively? In order to make a particular expense wholly and exclusively, what you need to look at is, hey, is this entire expense related to the business, related to the employment, related to employing, or some part of it is used for myself? Okay? For example, the company provides telephone expenses. For example, you are using your own home telephone. Let's say you're back in 2004 and you are probably a baby by then, but let's just say that telephone expense, you are using your own telephone or your own smartphone at your own home, right? And you're recharging all the work calls you are attending from that phone. Okay. Now, let's say 60% of it you are using for work, rest of the 40% you're chatting with your girlfriend or boyfriend or whatever friend you have. That is for your personal use. Let's say you are given a phone for work purposes. The company is like, hey, you use this for work. Okay, we will recharge, we will pay the Wi-Fi, we will pay the service for that phone. the service expense for the calls. Let's say using that phone, 60% of the calls were for work. Rest of the 40% for personal purposes you have used. Then only that 60% of recharge, only that 60% of recharge that is done for work purposes will be called wholly and exclusively. Exclusive to the work that you're doing as an employed person. Wholly, the entire amount, and just for that employment duties. That is what it means. Okay, you have to be like, hey, the objective of incurring this expense is for you to perform your duties. Personal stuff is not an allowable expense. Anything that you're using for personal use, okay, whether it's Wi-Fi, whether it's telephone, whether it's a car that is provided to you, whether it's the accommodation that is provided to you, if you're using it for work purposes only that part of the expense that you're using for work, that you're using for your employment, only that part is an allowable deduction. Allowable. Only that part is allowable. Anything that you're using for personal expenses, personal use, that part is not allowable. Okay, that is the gist of what it means for an expense to be wholly and exclusively for work duties. Another point is, for example, the company is like, hey, we want you to wear proper clothing, we want you to wear shoes, good shoes for work purposes. Let's just say that is the condition. You can't be like, okay, I need good shoes, let me go buy from Jimmy Choo's, let me go buy from Alan Solly or some branded freaking pair of shoes. Good shoes means good shoes, not freaking luxurious kind of shoes either. Alright, for example, you need good work clothes. You can't buy luxurious amount of clothing. For example, I need to wear a black shirt for this, let's say to attend these classes, to provide tutoring service to all of you. I have to wear a black shirt. Actually, they provide uniform. Let's say the dress code is to have a black shirt. Okay, I can't buy this black shirt from let's say American Eagle, right? I can't buy the same black shirt for like 5,000 rupees when I can easily get this for 200, or let's say I can easily get it for 500 in Bangalore, right? When I can easily get that shirt for 500 in Bangalore, and I'm going to a really high-end store to get my black shirt, and that's costing me 3,600 or literally 5,000. Trust me, there are shirts that literally cost 5,000, and it's just a plain black shirt. For what we don't know, just for the brand name, right? So when I can get it for cheaper, when I can get it for a decent price, not even cheaper, decent price for a decent quality, but wantedly, like purposefully I'm going to a high-end place and getting it, that part is not allowable. Again, all of this part will be given in the question. You don't need to think that much for yourself. Okay, so for example, if an employee is required to wear clothes of a high standard for employment, that expenditure is not deductible. Alright, the second thing is home telephone. Like I said, the telephone expenses. The company is providing the telephone, like they provide the phone, and you're like, they provide all the recharge, they provide the service for that phone. 60% you're using it for work. That 60% amount is only deductible. Where you can separate the calls, or where you can separate the expense into for work purposes and not for work purposes, that time only the portion of the expense that you're using for work, only that part is deductible. Any part that you're using for personal use, whether you're calling your friend, you're calling your parents, talking for hours, that part of the expense is not deductible. That will not reduce it. Alright, so that is what you're talking about when you're thinking about wholly and exclusively. Let's see what necessarily means. Necessarily basically means that it is an inherent requirement of the job. Inherent requirement. Now what does that mean? For example, you are supposed to meet a few clients. Okay, the part of the job is you have to go somewhere, you have to take an accommodation there, that you have to take a hotel room there, you have to pay for your own car there, the fuel expenses, the travel expenses, the food expenses in order to meet a client. Okay, this is necessary for performing your duties. That is, the keyword here is it is inherently requirement of the job. It is inherently a requirement of the job. It is not supposed to be imposed by the employee's circumstances. Now, for example, you are meeting a few clients. Correct? What did I say? What is the example? You are going somewhere in a different city or a different country itself to meet a few clients. Okay? The accommodation, the travel, food, all of those expenses you are incurring. Is this an inherent requirement of the job? Yeah. Meeting clients is part of your job description as a financial analyst. Okay? When you're providing a financial analyst service or an audit service and you have to meet those clients for a proper face-to-face discussion, that is an inherent requirement of the job. Anyone in your position, another way of thinking is not just you. If anyone in the same position, in the same employment position has to meet clients, even they will incur the same expenses, then that expense is deductible. But let's say in order to meet those clients, you are going to a golf club. We all know how expensive golf is. The membership itself costs like freaking, 1 crore. I don't know, the one near my house is like 10 lakhs for like a year. Let's say you bought the membership to meet those clients. Isn't that a stupid thing to do? Right? First of all, it's a very stupid thing to do. But is it an inherent requirement of the job that you meet them in a golf club? No. You can meet the client anywhere. Had someone else been in your position, they would have met the client in a proper, restaurant maybe, or a proper desk, or at a co-working space, right? If it's an inherent requirement of the job, that is anyone in your position, anyone who is employed in your position has to incur this cost, then it is allowable. But let's say in order to meet those clients, you went to a golf and you went to a golf club, you paid membership over there. What's going to happen? Sure, you met your client, right? Duty is finished. But is this an inherent requirement of the job to buy the membership? No. You could have met them anywhere, somewhere cheaper, right? It should be an inherent requirement of the job. That is what necessary means. Whatever expenses that are necessary to conduct your duties, that expense is allowable. That expense can be deducted for tax purposes. The last element is performance of duties. What's going to happen here? Performance of duties essentially means that it is required as a part of your duty, as a part of your employment. Again, all of these are quite similar, but here you have to remember that expenses incurred before employment are not allowable. In the performance of duties basically means that, hey, you got employed In the performance of duties, you have to incur the expense. Anything you incur before the performance of duties. For example, the morning breakfast you have. That is part of your duty. No. Are you performing your duty? Are you in the process of performing your duties? No. Right? Any expense that are incurred before or after the performance of duties, they are not allowable. Okay, that's it. These are the three aspects you need to remember when it comes to what is expenses wholly, exclusively and necessarily. For example, you got hired as a financial analyst. Let's say you got hired as a financial analyst and it is because of your ACCA membership or affiliation. What does that mean? Affiliation basically means that you finished all of the exams, you don't have work experience. The 3-year PER requirement that you need, the 3 years relevant job experience you need in order to get the membership, you don't have that. If you finish all of your exams with or without exemptions, you cleared it all, then you become an affiliate, ACCA affiliate. ACCA membership is when you finish the 3-year requirement as well. Let's say you got hired because of your affiliation as a financial analyst. But can you tell me this affiliation expenses, that is your exam fees or your course fees from ArivuPro, exam fees, course fees, materials, all of these expenses you incur when you are writing for exams, all of the, let's say subscription fees, we just looked at that, right? Subscription, all of these expenses you are going to incur to get this affiliation. Can you tell me now, you got this affiliation before you became a financial analyst. Can you tell me these exam fees, course fees from ArivuPro, materials, subscription, all of these expenses that are incurred, was it in the process of performing your duties as a financial analyst? No, it's not. Job you got because of it. Job you got after or the affiliation. Let's just say in this example, you got the job because of the affiliation before the affiliation. Okay, you got the job right after your affiliation. Is it part in the course of performing your duties? No. Any expenses that you incurred before you got the job or before performing your duties or not in the process of performing your duties is not an allowable expense. It should strictly be a part and parcel of your role and responsibility in the organization. Very simple. Alright, so no deduction is made for that expenses that you incurred beforehand. Okay, so it needs to be in the performance of duties. As a financial analyst, in the course of your duties, you had to meet a client, and in the course of the duties, you had to travel to that place where you had to meet the client, food expenses, all of those things. In the performance of duties, you incurred certain expenses, right? Not before you became a financial analyst, not after your retirement. During the performance of duties, you incurred expenses. That is wholly, exclusively and necessarily for the purpose of performing your duties. That is allowable. It can be deducted. Okay, so this is the best example I can give. Whatever affiliation you got, material and whatever expenses you have incurred because of that affiliation, it was before you performed your duties. So it doesn't freaking matter if you incurred those expenses. It's not deductible for tax purposes. Alright, so wholly, exclusively, necessarily. Okay, the only thing you have to remember is, you're going to be like, ma'am, but you said subscription fees is deductible. Here I'm basically making it clear what in the performance of duties mean. That is, you got the affiliation before you got the job. Any expenses that you incurred before performance of duties is not an allowable deduction. When we're talking about subscription to professional bodies, that comes under a separate item. This is a different item, this is a different item. When I'm talking about the affiliation fees, it's not just the subscription, right? You pay exam fees, you pay course fees, materials, all of these things you are going to incur, correct? So that's the thing. You're going to incur so many expenses, but it's not in the performance of your duties. It is not in the performance of meeting a client or analyzing financial statements, making charts, time sheets. All of these are your duties, let's just say. Subscription to professional bodies is a different item. I'm just making the difference clear. Any expenses that you incurred beforehand, before performing your duties, that is not an allowable expense. Any subscription you make to a professional body, a relevant professional body, like I said, if you're hired as a financial analyst, your ACCA subscription becomes relevant. But if you're hired as a salesperson, you're hired as a doctor or a nurse, right? Hats off to you. But it's not related to ACCA. The subscription that you're paying to ACCA, it's not relevant. That's not included. Subscription is an allowable expense. Don't get me wrong. Subscription to a professional body is an allowable expense. It's just not included in this item. It is included as a separate item. Subscription to professional bodies. You're again, exam fees, course fees, all of these things, right? That you paid out of your pocket before you got the job. Even during the job, you are paying out of your pocket. That is not an allowable expense. But there are some companies, again, it's very nuanced. In some companies, they reimburse those expenses. Sometimes they only provide you the course material and you're like, hey, for your professional development, for your career development, we are going to sponsor your education. Company sponsors your masters as well. Masters, your online masters or online bachelors, right? You see a lot of people doing online MBAs. Company sponsors it, right? Company sponsors your masters. Companies also sponsor sometimes your ACCA or CFA stuff, right? That does not come here. It comes under reimbursement expenses. Again, you have to separate these items. Okay, you have to separate these items. Here, it's not included. Here, a separate item is given for subscription. Any exam or course fee, any exam fees or course fees or material amount, right? Some companies reimburse that for you, for your professional and career development. Again, it does not come over here, it does not come over here, it comes over here. That's the difference. That's the only difference. Anything that's relevant to your employment is an allowable deduction. Anything that's not relevant to your employment is not an allowable deduction. That's the only thing you have to remember. Now, let's see certain other expenses that are allowed by the statute. Certain expenses that are allowed by the statute, that is by the law. This is add another page from here. What are the other expenses as we have seen? Employees' contribution to occupational pension scheme. We just looked at it, right? So now we are done with salary. Bonus and commission also is simple, right? Whatever we learned the definition, that's the only thing you need to remember. Okay, we are done with salary, bonus and commission. Benefits, there's a huge list you have to remember. We'll get to it later. Reimbursement expenses and cash vouchers also, we'll get to it later. In allowable deductions, we looked at expenses incurred wholly, exclusively and necessarily in the performance of duties. Correct? We learned the three elements. After that, what happened? Contribution towards employer's pension scheme. What does that mean? Like I said, there are two types of pensions. We'll look at it more in the pensions chapter itself, but right now you need to know that there are two types of pensions. One is occupational, that is your employer provides you that pension, and one is personal, that is you have your own pension scheme from an insurance company or a bank. You have a personal pension scheme and you have an occupational pension scheme. You can have both or you can have just one. Okay, if you feel like, hey, employer's occupational pension scheme is not good, I will have my own personal pension scheme. You can have occupational, you can have personal also. Both are taxed differently. Both have different rules, but you can have both. That's the thing. Sometimes you're like, hey, occupational pension scheme is utter bullshit, I'm not going to go for that. You can opt out of it. You can tell the employer, hey, your pension scheme is waste, I'm going to have my own personal pension scheme. They will opt you out of it. You can have only personal as well. Sometimes you're like, hey, occupational pension scheme, the one that employer is providing is great. You can have only occupational as well. Personal you don't need. Okay, but pensions are of two types. Occupational that the employer provides you and personal that you have for your own. Okay, the reason it's important is that employers are obligated to provide you that pension scheme. They are obligated to provide you that pension scheme. As per law, it is a requirement for them. Okay. So that's why you need to know the difference between these two. They are taxed differently. We will learn more about pension schemes in a different later chapter, but all you need to know is that employers are obligated. In occupational pension scheme, you as an employee, you contribute little bit of money. You as an employer, your employer also contributes a little bit of money towards your pension scheme, your EPF. If you see your cost to company or if you see your offer letter, they'll give you a certain breakdown. You will see provident fund, employer provident fund. That is your, in UK terms, that is your occupational pension scheme. That is, the employers, the company has its own pension scheme. They, from the company, they deduct a certain amount and they provide it to the pension scheme for your benefit. And you as an employee, from your salary, they deduct a little bit of amount and they provide it to the pension scheme. So even if your actual salary is 45,000, 4,000, 4-ish thousand or 2,000 or 3,000 depending on the company, 2 or 3,000 they will deduct it from your salary. In hand you will get 42,000. That 3,000 will be provided to your employer's pension scheme, occupational pension scheme. Okay. Now they are saying that, hey, any contribution that you make, you as an employee, this part, any contribution you make towards your occupational pension scheme is allowable. That is what this means. Any contribution made towards your employer's occupational pension scheme is an allowable deduction. That's it. This is one of the things that is allowable by the statute. Let's look at the next one. Subscription to professional bodies, as long as they are relevant to your, let's just add a note over here. As long as it's relevant to performing duties. As long as you understand the concept and you remember the performer, you don't need to don't need to do anything else in this chapter. Are we done with this? Yes. Subscription to professional bodies, I have already explained what that means, right? So what's going to happen? This is done. Then payroll deduction scheme. Let's just look at this in a detail once. What did I say? For example, you're getting 45,000 per month, for example. Pretty sure you all will be earning more once you're done with ACCA. But yeah, let's say you're earning 45,000. What's going to happen? You made a vow to yourself that, hey, out of this, at least 5,000 I want to provide it to a charity. That is out of your goodwill as a citizen, as a proper member of society, as a proper human. You want to deduct certain amount from your salary and give it to charity. You made a plan like this. But things rarely go according to plan. You're like, hey, I'm going to hang out with my friends. Out of this 5,000, you use 2,000 for hanging out with your friends. You go to Wonderla or something. Alright? And then you're like, hey, I want to buy some video game. I just got my salary. Let's go out and eat. Let's go out with your friends. Let's buy Netflix subscriptions, YouTube Premium. All of these expenses happen, whether you like it or not. Sometimes it's not in your control. That's why you need to track your expenses properly. Let's say this is the case. You want to provide 5,000 to the charitable institution, but unfortunately or fortunately, you did not do it. So what's going to happen? Employers, they provide a payroll deduction scheme. In this scheme, it's like, hey, you have zero control over your expenses. So what I'm going to do, from your salary itself, in hand, from your salary, I'm going to deduct 5,000 and I'm going to provide that 5,000 to the payroll. I'm going to provide that 5,000 to the charitable institution. So in hand, you're going to get 40,000. You're like, this is better. Now I don't need to always make sure that my expenses, at least 5,000 buffer is there. Directly, if you deduct it from my salary, I don't need to worry about anything. So 40,000 you'll get in hand. That 5,000 the employer will pay it to the charitable institution. This is called payroll deduction scheme. Any charitable donation you made under payroll deduction scheme, only under payroll deduction scheme, any amount that you provided for charity under payroll deduction scheme is an allowable deduction. Okay? Now, that's one thing. Travel and subsistence has a special rule. So let's write it over here. Okay, it's a small rule. Let's just look at it once. Now, yes, when it comes to travel expenses, right, it's obvious. Any travel expenses you incurred in the necessary performance of duties, it comes under expenses that are wholly, exclusively and necessarily incurred in performance of duties, correct? For example, you need to meet a client, right? For example, they're in a different city or even in the same city. Any expense that you're incurring in the performance of duties that is required for you to be there, right? That part is allowable. So this is simple. When you think about it, what and all expenses under employment income, any expenses that are related to your employment only will be allowable. If you take a cab to Wonderla and you're having fun there, right, that is for personal use, right? Those personal expenses are not deducted, right? So what's going to happen here? Just make a quick note. Travel expenses are allowable only if it is wholly, exclusively and necessarily in the performance of duties. I'll just write this in shortcut. Wholly, exclusively and necessarily in the performance of duties, or if it's required for necessary attendance. What does that mean? For example, you are in a useless meeting. You just got called to a useless meeting, but your attendance there is necessary. So you have to go there. If it's required for necessary attendance, right? If it's required for necessary attendance into a place, or it's required for performance of duties, all of this will come under travel expenses, and these travel expenses are an allowable deduction when it comes to calculating your employment income. So only if it's wholly, exclusively and necessarily in the performance of duties, or if it's required for necessary attendance. Okay, and another thing, obviously it's not deductible if, if it's not deductible if, two things, 2 points you have to remember. First of all, if it's for ordinary commuting. Ordinary commuting is from your home you're coming to work, from work you're going to your home or PG. Ordinary commuting, let's say from home to work or temporary place of work. For example, in a co-working space, just for a small time period. Instead of working in your normal office, if you're going to a different office, then temporary place of work also. If it's for ordinary commuting from your home to work and work to home, then it is not deductible. Secondly, if it's for personal use, personal travel, that is from your home to Wonderla with your friends or going out to eat with your family. I don't know how in this traffic you'll manage, but whatever travel expenses that you're incurring for personal use, that is not deductible. And for ordinary commuting from your home to work, you're gonna be like, hey, I'm sure people who are watching this video at this point, if you are still awake, what's gonna happen? You will have this doubt. Ma'am, what about those companies that provide car or vehicle to the employee? Or you might think, hey, what about those companies that are providing cab services? Of course, they come under benefits. Okay, if a cab service is provided, medical benefits are provided, medical benefits. Okay, cab service, medical expenses, all of these, etc. We have a huge list that we'll get to later. But any cab service that is provided from your work to home or home to work, that comes under benefits, and that benefit is taxable. On that benefit, you have to incur certain amount of tax. But if you're using your own vehicle for ordinary commuting, it's not deductible. Ordinary commuting is from your home to work or home to temporary place of work or PG or place of stay to work. Place of stay to place of work. That is your ordinary commuting. This is something you will always incur. It is not deductible if you're using your own vehicle. From home to work or temporary place of work, or you're using your own vehicle for personal travel, that is not deductible from your income. That is not deductible from your employment income. Travel expenses are only allowable if it's for wholly exclusively and necessarily required, or for your wholly exclusively and necessarily in the performance of duties, or if it's required for your necessary attendance, you have to be there, okay, as a part of your duty. It is not deductible if it's for ordinary commuting or if it's for personal travel. But if company provides a cab service, that is a taxable benefit that you're getting, you have to get taxed on it. Then you're going to be like, ma'am, what does this mean? Use of your own car. That is, using your own car for employment purposes. If you're using your own car for employment purposes, again, not for ordinary commuting, but not ordinary commuting. For example, you have to visit a client. You're using your own vehicle to do that. Then this is an allowable deduction according to HMRC's mileage allowance. For example, it was 120 miles away. The client place, wherever you're going, it was 120 miles away. Then you have to use HMRC's mileage allowance, 120 miles, and it needs to be multiplied into 0.45. We already looked at that. What is HMRC's mileage allowance? For the first 10,000 miles per annum, 0.45p. 45p basically, 45p basically means 0.45 pounds. Okay, so that is for first 10,000 miles. Over and above 10,000 miles, it is 0.25p. That is the HMRC's mileage allowance. If you're using your own car for employment purposes, that is not ordinary commuting and not for personal use, then you have to, it comes under use of own car under HMRC's mileage allowance. Now, in order to remember this, I know I just yapped a whole lot, but in order to remember this, there are essentially only 4 possibilities. First, you are using own car. You are using own car. If you are using own car, or you are using company car, or you are getting cab service. These are the 3 possibilities, okay? The other 2 possibilities are, you are either using it for personal use, or you are using it for employment purposes, that is not ordinary commuting and not personal use. Remember, if it's for ordinary commuting from work to home and home to work, it is not deductible. Okay, let's say they provide a cab service. If they are providing cab service from home to work and work to home, okay, let's just remove cab service for a moment. Let's remove cab service for a moment. Let's say you have your own car, whatever car you want. You are using it for personal use. Is it deductible? No. It's not deductible. You're using your own car for your own purposes. What does that have to do with your employment? It doesn't make sense, right? If you're using your own car for employment purposes, then it is deductible. If you're using your own car for employment purposes, then it's deductible under what? HMRC mileage allowance. This part that we just used, that we just saw. Use of own car for employment purposes, you have to use your mileage allowance according to HMRC. Let's say you are using company car for personal use. Company car you're using for personal use. Is it deductible? No. For employment purposes, it's not deductible. Both of this will come under benefit. Employment benefit, and it is taxable. It's a taxable benefit, both personal and employment. The company provided the car for you. You are using it for personal use. You are using for employment also. It is a taxable benefit that you're getting. Okay. If you're using it makes sense, right? Just try to understand the logic over here. You're using your own car for personal purposes. Does that have to do anything with employment? No. But let's say you're using your own car for employment purposes, that is traveling somewhere to meet a client. Okay. Then that part it's not for ordinary commuting. It is for employment purposes, wholly, exclusively and necessarily in the performance of duties. WENP. It is deductible only when you are using it for other employment purposes. Okay. It is deductible according to HMRC's mileage allowance. Let's say company gave a car to you. You're using it for personal purposes and employment purposes and ordinary commuting, everything. The use of company car is a taxable benefit. It has a different rule that we'll look at it soon. Okay, as long as you understand this, it's enough. Again, provision of cab service, that is also a taxable benefit. Even though it's for ordinary commuting, it is actually a benefit for you, right? That benefit is taxable. Even if it's ordinary commuting, if they are providing a cab service from home to work, work to home, right? That part is a taxable benefit. This is the only thing you need to remember. Alright. Now, reimbursement. What does let's look at the next one. The next one is, okay, so we are done with travel and subsistence. Subsistence is basically your food expenses, again same thing. Okay, use of own car, that is done. Only use of own car for business purposes. If you're using it for private purposes, it has no deduction. Okay, so all of these allowable deductions are officially over. Now let's look at reimbursement expenses. Benefits we'll look at it later, because benefits, it's a huge list. We'll look at each of the item. You have to remember it. Okay, now let's look at reimbursement expenses. When it comes to reimbursement expenses, there are two things you need to keep in mind. Alright, reimbursement. What is being reimbursed? Any expense that you incurred that is being reimbursed, that is a taxable benefit. Okay, let's look at a certain number of rules. The thing with this is that you have to be careful of what is known as double deduction, double counting or double deduction. Ma'am, what is double deduction? Now, let's look at it. For example, we'll go back to that telephone bill only, okay? Telephone service is provided to you. Okay, telephone services provided to you. Let's say the company is paying for that telephone service. Let's create a little mind map here so that it's understandable for you. Versus company. Company pays for it. Let's say the company is paying for your telephone service, your Airtel bill or Jio bill, whatever you have, telephone service that for your calls or Wi-Fi, whatever it is. Okay, let's say the company is paying for your Wi-Fi or telephone, anything, telephone, Wi-Fi. The essence of the example stays the same. Let's say the company is paying for your Wi-Fi. You are using it for, either you are using it for employment purposes or you are using it for personal purpose. True? Either you're calling your friends on that telephone or you're calling your workmates. Right? If it's for employment, if the company is paying for it and it is for employment, then it is deductible. It is an allowable deduction. Should I use a darker color since this is a white background? It is an allowable deduction. Why is it an allowable deduction, guys? It is used wholly, exclusively and necessarily for employment purposes. It is an allowable deduction. That's why. Let's say the company pays for the telephone service, but you're using it for personal purpose. The part that is used for personal purpose is not allowable, as we already discussed. Let's say this part is clear. If company is paying for your service, your telephone bill or Wi-Fi bill, part of it you're using for employment purposes, that is allowable deduction. Great. If you're using it for personal purposes and you can divide that amount, then it is not allowable. Okay. Now, let's say you are paying for that telephone service. You are company pays. You pay. Let's say you pay for the telephone service. Now, same thing applies. You are either using it for company, that is your employment purposes. You're either using it for employment purposes or you're using it for personal purpose. Correct? Either using it for employment or you're using it for personal. Let's say now you are being reimbursed for it. Okay, you pay for both employment and you pay for both personal. Let's say you are being reimbursed for it. What's going to happen? You're going to get reimbursed for the employment and personal part of it, right? The portion, this is called reimbursement expenses. And it is a taxable benefit. Both of these. The only thing you need to remember is, if you're claiming a deduction here, you cannot again claim for reimbursement expense. Okay, that is the only thing. For example, if the home telephone bill is fully reimbursed, that is your employment part and your personal part is being reimbursed, and you claim a deduction on this employment aspect, right? What did we discuss? Any expense that is wholly, exclusively, necessarily in the performance of duties, it has been incurred. You claim a deduction, it is an allowable deduction. Now what will the employee do? Hey, I'm getting 2 deductions here. Here also I'll get allowable deduction. Here I'm getting reimbursement benefit. This is called double counting. First of all, you're getting the money from the company. It's being reimbursed for you. Are you actually incurring the expense? No. The company reimbursed it for you. It's a taxable benefit. But what you're going to do, hey, it is wholly, exclusively and necessarily WENP. Right? That's satisfying. So I'm going to claim an allowable deduction. The problem here is you're getting benefited twice. This is called double deduction or double counting. First of all, you are paying, let's say you're paying 1,000 rupees. Let's say you can separate it, you're paying 1,000 pounds. Per year you're paying 1,000 pounds for telephone or Wi-Fi bill, and you're using 1,000 pounds just for employment, let's just say. And the company reimbursed it for you. They provided 1,000 pounds to your bank account. Have you actually paid anything? No. Now the company paid for it. What are you going to be like? You're going to be like, hey, this 1,000 pounds has been used wholly, exclusively and necessarily for performance of duties. So you're from the salary, that is from your employment income, you're going to claim a deduction, 1,000 pounds. Now the net benefit here is that, hey, they provided you 1,000 pounds, you're again getting a benefit of deduction, you're again getting a deduction from your salary, 2 times you're getting the benefit. HMRC is like, this is sus, this is not good, this is suspicious. You're getting twice the benefit for the same amount. So they made a rule. Reimbursement So basically it says that, hey, there is an exemption if the amount has already claimed a deduction. The essential rule here is you can only claim one of the two. You can either claim reimbursement or you can claim deduction from tax. you can only have a reimbursement from the company, or you can use that amount as a deduction for tax purposes. Only one. If you use both, what happened? Double deduction. You're getting twice the benefit for the same amount. Either in the form of deduction from tax or either in the form of reimbursement, you're getting twice the benefit. So you have to claim only one of the two. For example, the company has reimbursed the expense. Again, you cannot claim a deduction. The same amount you cannot claim a deduction. So this is reimbursement expense is going to be a taxable benefit. Alright, so this is the essential rule when it comes to reimbursement. Okay? What next? There's one thing you have to remember when it comes to use of your own car. Let's say you are using your own car. HMRC mileage allowance you're going to use. What is HMRC's mileage allowance? First 10,000 miles per annum is 0.45 pounds. Over and above 10,000 miles per annum, it's going to be 0.25 pounds. Cool. So what's going to happen here is the employer pays certain amount of mileage allowance. Employer here pays a mileage allowance. Employer pays mileage allowance. What are you going to do now? Employer again is paying mileage allowance. What are you going to do now? If the AMAP rate, that is HMRC, the whatever amount is given by the HMRC's AMAP, that is approved mileage allowance provided. HMRC's AMAP, if it's equal to, listen very carefully, there are three scenarios you need to keep in mind when it comes to use of your own car. Use of your own car, you usually use HMRC's mileage allowance. That is use of your own car for employment purposes. We already looked at this point. What's going to happen? Let's say the employer pays certain amount of mileage allowance. Okay, for use of your own car. Hey, they're like, you're using your own car, you know what, we'll give you certain amount of money. But for taxation purposes, you have to use HMRC's mileage allowance, right? So what's going to happen? If HMRC's AMAP is equal to the mileage allowance, then the situation is no harm, no foul. What does that mean? There is no deduction. There's no deduction. There is no benefit either. It gets netted off. What does that mean? See, mileage allowance is a benefit they are providing to you. The certain amount, for example, 1,000 pounds they are providing you per annum as mileage allowance because you're using your own car for business purposes. For taxation purposes, what are you supposed to do? HMRC's AMAP. If the mileage allowance, that's the benefit they are giving you, and the deduction that you're supposed to have, that is HMRC's AMAP, if benefit is equal to the deduction, it's a net zero. You're not going to have any deduction, you're not going to have any benefit. Let's look at another scenario. For example, HMRC's AMAP is greater than the mileage allowance. For example, the mileage allowance is not enough. What are you going to do? The HMRC's AMAP is 1,000 pounds, for example. You calculated everything, it was 1,000 pounds. Mileage allowance, they had only given you 900 pounds. Mileage allowance is lesser than your AMAP, correct? So it's going to be a net deduction. You're going to, the 1,000 pounds is going to be a deduction. The 100 pounds, sorry. Let's say, I'll repeat it again for clarity's sake. HMRC's AMAP. Let's say, according to the AMAP, you are supposed to have 1,000 pounds. 1,000 pounds of deduction is required. Mileage allowance benefit, they had provided only £900. You're supposed to have a deduction of £1,000. Mileage allowance is a benefit that is given to you. Correct? You're going to have a taxable benefit of £900. So what's going to happen? According to HMRC's AMAP, £1,000 of deduction is required. According to benefit rules, the mileage allowance is a taxable benefit. But your mileage allowance falls short of what is supposed to be deducted. Then you're going to have a net deduction. That is, the rest of the £100 ka gap is going to be a deduction. For clarity's sake, let's look at the third case. Let's say your HMRC's mileage allowance, that is AMAP, approved mileage allowance provided, is less than the mileage allowance provided by the employer. Let's say you only require £1,000 according to AMAP. This is the amount of deduction you're supposed to have. Let's say the employer provided £1,200 as mileage allowance. This is a taxable benefit. Then what's going to happen? You're going to have a net benefit. That's it. You're going to have a benefit. That's it. Of what? £200 in this example. Now, let's repeat it. Let's look back at a snapshot. You are using your own car for business purposes. You can claim a deduction that is equivalent to HMRC's mileage allowance. But let's say your company pays a mileage allowance. What's going to happen? If HMRC's AMAP, that is the portion that will be given to you in the exam, if that is equal to the mileage allowance that is provided by your company, by the employer, then there's no deduction, no benefit. You can't deduct anything. You can't have a benefit that is taxable either. Let's say according to HMRC's AMAP, you're supposed to have a bigger deduction, but mileage allowance provided by your employer falls short. Then there will be a net deduction. That is, the remaining amount that is not covered by the mileage allowance provided by your employer will be deducted. Let's say HMRC's AMAP is less than the mileage allowance. That is, the employer paid you more than you were supposed to. Then the excess amount will be, that is the £200 will be a benefit, a taxable benefit. There are only two words you should keep in mind. What is a taxable benefit? Okay, what will come in the upper part of this? Taxable benefits or taxable income. And what is an allowable deduction? It can either be an allowable deduction or it can be a taxable benefit. There is no two in between. Only if HMRC's AMAP is equal to mileage allowance, there will be a no deduction, no benefit situation. If one is greater than the other, you'll either have a deduction or you'll either have a benefit. Alright. This is one thing you have to remember. Alright. Now, we are done with most of these things. Right? We had looked at allowable deductions, expenses wholly, exclusively, necessarily in the performance of duties. We had looked at contribution towards pension scheme. We had looked at subscription. We had looked at charitable donations under payroll deduction scheme. Travel and subsistence. Again, not for ordinary commute and not for personal travel. If you're using your own car, for employment purposes, then the deduction is equivalent to HMRC's mileage allowance. I'll give you a simple example, guys. Let's say you traveled 120 miles. According to HMRC, you can claim a deduction that is equivalent to the HMRC's approved mileage allowance table that is given to you. HMRC provides an allowable deduction. That is, the first 10,000 miles per annum is going to be 0.45. Let's say 120 miles have been used of your own car into 0.45. How much is that? 0.45 into 120. 54. 54 pounds of allowable deduction you're supposed to have. £54 of allowable deduction in this part, in this particular item, it can be deducted. According to HMRC, if you're using your own car for employment purposes, you can use HMRC's AMAP and you can claim an allowable deduction. The only situation where it gets complicated is when your employer also provides you some kind of mileage allowance and makes shit very complicated. What's going to happen? Employer's mileage allowance. Let's say the employer's mileage allowance is, instead of 0.45, it is 0.5 per mile. It is 0.5 per mile. That is the employer's mileage allowance. That is, they are giving you separately the money. Okay, so what is going to be that amount? 120 into 0.5. That is, they are giving you 60 pounds of what? Taxable benefit. They are giving you 60 pounds of taxable benefit. What's going to happen here? HMRC's AMAP is less than employer's mileage allowance. There you're going to have a net benefit, net taxable benefit of how much? 6 extra pounds. Your taxable benefit is going to be 6 pounds. That's the only thing that you need to remember. This is the example that is mostly given to you. Let's say instead of 0.5, they are giving only 0.3 per mile. What's going to happen then? 0.3 per mile. Then what is the taxable benefit you're going to get here? 36 pounds. Right? Taxable benefit is going to be 120 into 0.3. 36 pounds. What's going to happen? Now HMRC's AMAP is greater. You're supposed to get a benefit under benefits column, under benefits item. You're going to have your mileage allowance as well. So we have to look at the net amount, right? You cannot have both benefit and a deduction like that or under the same thing. So here what they have said is, hey, HMRC's AMAP here, it's greater than the mileage allowance the employer is providing you. So you on the net amount you can get a deduction. So instead of adding it again in the benefits column as mileage allowance and then again claiming a net deduction, again claiming a deduction for the HMRC's AMAP, you can claim a net deduction, net allowable expense of how much? 54 minus 36. How much is that? 54 minus 36. 18 pounds you can get a allowable deduction. Over here you can claim a deduction of how much? 18 pounds. In this particular case, in the first case, what we had seen, there's a taxable benefit. That is, in the benefits column, there's going to be a 6 pounds taxable benefit. This is the only thing that you have to keep in mind. Now, we had looked at almost everything. We have benefits, reimbursement expenses and cash vouchers. We had also looked at reimbursement expenses, right? Reimbursement expenses is also very simple. The only thing you need to keep in mind is anything that you claim a deduction for. That is, anything that relates to this and you claim a deduction, you can only get one of the following. If reimbursement is already provided to you, you cannot claim a deduction on that again. That is what they're saying, because reimbursement is a taxable benefit. Okay, when we solve some problems, we will understand. So we have only benefits and cash vouchers to remember. Alright, so I suggest you all to first absorb everything that you have learned till now, everything I've explained till now. These are the only things that we are summarizing with. We're summarizing with mind maps. Okay, these are the only things you need to remember for these elements. Benefits is a huge list of benefits that you need to remember. So in the question, when they give you a certain when they give a certain item, when they give a certain benefit, you need to recognize, okay, whether this is taxable or whether this is not taxable, whether it will come here or whether it won't come here. You need to just remember that. We will look at each of this item in detail. Okay, and then we'll look at cash vouchers. Again, not much to remember in cash vouchers, so we'll look at these two things. Because we have a lot of things to remember, take a little break. Okay, take like 1 hour break, drink water, eat breakfast or eat some kind of snacks. Alright, and then we'll look at one by one everything, all the benefits and cash vouchers, and then you'll be done. Alright, so yeah, take a break and we'll come back. Alright, bye bye. Now, welcome back. Let's just look at a few problems on whatever we just discussed right now. Alright, it will really reinforce the concepts that you just learned, and it will become much easier for you to actually relate to the topic. Alright, and the next class we'll be looking at the benefits and cash vouchers. Okay, the thing with benefits is that there are certain exempt benefits and there are certain tax benefits, taxable benefits. The thing here is you need to remember exactly the huge list of what is taxable and what is exempt. This is the only part you have to use your memory. The other parts is pretty easy to understand, right? It is pretty logical. Everything that's used for employment for the purpose of carrying out your duties is an allowable deduction. Any benefit that is given by your employer, that is a taxable benefit. Anything that's used for personal expenses is not a allowable deduction. Okay, now we had looked at salary, bonus, commission, reimbursement expenses, right? And we had looked at all the possible allowable deductions. Alright, just very little stuff is left. Now in order to actually reinforce the concepts of whatever we learned till now, of course, exempting all of the benefits and cash vouchers, we'll look at a few questions and then we will understand how to actually do these questions. Okay, now let's just look at this question. Alright, now first things first, we make notes right in the question. Okay, now Ada is a marketing manager and is employed by Dale Limited. Cool, nothing to actually remember here. During the tax year 25-26, she incurred the following expenses in connection with her employment, all of which were reimbursed. Guys, what do we learn about reimbursement? It's already reimbursed. Okay, that means your employer had already paid the amount. This is reimbursement, correct? Reimbursed expenses. You cannot reverse the reimbursement. You just have to see, hey, which one is related to employment that you can claim deduction on, and which one is for your own personal purposes. Okay, now let's look at this. All of this was reimbursed by your employer. Now we have to see what is going to be your reimbursement item and what is going to be your allowable deductions. Guys, home phone. What did we talk about home phone? Your telephone service that the company is paying for you. Alright, line rental, that is for your personal, normal personal stuff. Line rental is your personal calls. Even for personal calls, they have reimbursed. Even for personal calls, they have reimbursed. Even for business calls also, they reimbursed. Alright, so this is personal thing that is reimbursed. And this is business calls. Business calls is an allowable deduction. Right? Subscription to local gym. Guys, your company is reimbursing you for the local gym, but is it related to your employment? No. You are a marketing manager, yaar. What does gym membership have to do with anything? Right? It's not related to your employment. It's not wholly, exclusively, necessarily used for the purpose of carrying out your duties. Right? Can you tell me if it's claiming any of these allowable deductions? No. It's not a contribution to occupational pension scheme. It is not a subscription to a professional body. It's for your local gym. It's not a charitable donation, travel or use of your own car. So this is not an allowable expense, but still it was reimbursed for you. It is still reimbursed for you. Then, Chartered Institute of Marketing. What is her position? Marketing manager. She paid subscription to a professional body called Chartered Institute of Marketing. Is this relevant to your work or no? It is. Right? It should be relevant to your work. That is one of the things. And they had reimbursed for that. Awesome. Then, train fares to attend meeting at client premises. Guys, what did we learn about? Travel expenses. They are only allowable if, first of all, if it's WENP or if it's required for necessary attendance. Is this required for necessary attendance? Yes. In order to meet with the client, they incurred certain travel expenses. This is relevant to your business. Had you taken the train to go to Kodaikanal or something for a nice little vacation, that is not deductible, right? So this is 500 pounds. Now what are they asking? They are saying that, hey, what is the tax position of the reimbursed expenses? How should you treat this? How should you treat this? Now, here's the thing. Here's the thing when it comes to what? Here it comes to reimbursement expenses and allowable deductions. You will face something called double deduction, right? Here's the thing. You're getting reimbursed for something. Reimbursement from the company. You're getting reimbursement from the company, guys. Is this a taxable benefit? Yes. Reimbursement expenses is a taxable benefit. But certain amount of this reimbursement is also an allowable deduction. Correct? Some of these deductions, some of the things you are reimbursed for, it's an allowable deduction for tax purposes. So you have two elements here when it comes to reimbursement. I hope I'm just trying to explain the concept of reimbursement. You're getting reimbursed not only for personal stuff, you're also getting reimbursed for employment stuff. Things that is required for your employment also you're getting reimbursed for. You're also getting reimbursed for personal. Now they're asking, how should you treat each of this? I'll tell you how. When it comes to solving the actual question in the exam, when you're actually writing the exam, you don't need to do anything. It gets netted off on its own. Here's the note. Here's the good news. Here's the good news. Don't do anything special. You just need to remember that reimbursement you're getting for both personal stuff and your employment stuff. So don't do anything special. Let reimbursement be reimbursement. That is, let reimbursement be a taxable benefit in the pro forma. what is the next one? Let allowable deductions be allowable deductions. Let it be allowable deductions be allowable deductions in the pro forma. The thing here is it gets netted off on its own. It gets netted off on its own. You don't need to do anything special. This is one way of handling it. What another way of handling it is whatever is being netted off, right? Whatever is being netted off as employment related. Employment related is allowable deductions. That is in reimburse, or you can do one more thing. The another treatment here is, another way of treating it is, we'll put this in blue. Another way of treating it is reimbursement for personal stuff is a taxable benefit. What does this mean? The other way of treating it is only the personal element needs to be used as a taxable benefit. Okay, so here's the thing. Reimbursement you're getting for both personal and employment related stuff. The problem arises because employment related stuff is an allowable deduction. So here it gets netted off. You're getting reimbursement for employment related stuff, and you're getting deduction for employment related stuff. It gets netted off and net total is 0. One way of handling it is reimbursement in total. Reimbursement in total you put in the reimbursement item, and employment related stuff, whatever you get allowable deductions for, you put it in the allowable deductions column. It gets netted off. From the total, the employment will get netted off. It gets deducted. Only the personal will be remaining. Another way of treating this is only the personal reimbursement amount you have to put it in deduction. You have to put it in the reimbursement expenses income part, and then employment you can leave off. So there are two ways of dealing with this. Alright, let's look at both of this. How do we solve this question looking at both of this? Let's do the total method first. Let's say, what is the total amount of reimbursement that Ada had got? What is the total amount of reimbursement expenses she got? Alright, so what is it? 100 plus 85 plus 1200 plus, I'm not going to see anything, whether it's employment or personal, I'm not going to see here. I'm just going to take the total amount of reimbursement expenses. Okay, let's actually create a Venn diagram so that you can understand. We have a total reimbursement, guys. We have total reimbursement. This is the reimbursement amount. Out of this, certain amount is personal. Certain amount is personal. This is reimbursement amount. This is the total reimbursement amount. This is the element of that personal. This is the element of that reimbursement which is personal. Related to personal stuff, not employment stuff. The rest of this amount will be, the rest of the amount over here will be, let's use a different color actually, let's use red. You can actually see it. The rest of the reimbursement is for employment related stuff. This is it. Out of the total reimbursement, part of it is personal, part of it is employment. Now let's look at the total amount. Okay, what is the total amount? 1200 plus 600 plus, I have a calculator here opened. So total amount of reimbursement. Let's create the pro forma. First of all, employment employment income. How do we calculate? Reimbursement expenses I'm going to put here in total. Reimbursement expenses. The total amount I'm going to put in the income column. The top column, that is over here. Reimbursement expenses, I'm going to put the total amount. Reimbursement expenses, I'm going to put the total amount. What is the total amount I got? 2,485 pounds. 2,485 pounds is the total reimbursement expenses. As allowable deductions, what is going to happen? Less allowable deductions. I'm just going to calculate as normal. What is allowable deduction? I'm going to put it in allowable deduction column. Whichever is income column, that is whichever is a taxable benefit, I'm going to put it under taxable benefit column. Under allowable deductions, we got what? Now we have to see which of these are allowable deductions. Guys, under home phone, this much was personal. This much was related to your business. Which part of this is an allowable deduction? As we have seen, any expense that is incurred wholly, exclusively and necessarily in the performance of duties, including your telephone expenses, that is your business calls, it is relevant to your business in performance of duties. Can I say this 85 pounds is an allowable deduction? Yes. So here I'm going to write, hey, telephone for business. You can write it in any words you can. Okay. Telephone for business. 85 pounds is an allowable deduction. I'm going to deduct it from here. See, both of these methods you're going to get the same amount. Okay. Subscription to local gym. Guys, is this relevant to your employment? No. It is a personal subscription that you got reimbursement for. They paid you for that local gym. It is a benefit they are giving you. It is an extra benefit they are giving you. Understand? It is an extra benefit that is being given to you. Subscription to local gym is not an allowable deduction because it's a personal thing. Alright. Oh, damn. Yeah. Alright. Now, subscription to Chartered Institute of Marketing. It is a subscription to a professional body that is relevant to your employment. How do you see if it's relevant or not? They are a marketing manager. They are paying subscription to Chartered Institute of Marketing. It is relevant. It's pretty logical, right? So this part is an allowable deduction. So I'm just going to write here subscription to professional body. Subscription to Chartered Institute of Marketing. Is that it? Chartered Institute of Marketing, CIM. Okay. Out of this, 600 pounds. Damn, that's a lot of money. 600 pounds is an allowable deduction. You put it here. Alright. Now, train fares to attend meeting at client premises. Absolutely right. 500 pounds is an allowable deduction. Travel fares. Train fares. How much was this? 500 pounds. Okay? 500 pounds is your allowable deduction. Now, here's the thing. It automatically gets netted off. Here, out of this total reimbursement expenses, anything that's an allowable deduction, you're going to deduct it. What is going to be left over here? Your personal amount. That is, for the personal expenses, you got reimbursement for. Okay. So, what is going to be the amount? Employment income, the taxable benefit, employment income, assessable to tax. What are you going to do? 2485. You're going to subtract 85 pounds. You're going to subtract 100 pounds. Out of this, 1300 pounds is going to be assessable to tax. Another way of seeing this is, let's make another pro forma. I hope this method is clear. The first method basically says, hey, don't do anything special. If it's a total reimbursement amount, you put it as taxable benefit as usual. And allowable deduction, you put it in allowable deduction column in the pro forma. It will net it off. It will net off. Anything that's an allowable deduction will be deducted from your total reimbursement. Everything that's left will be the personal amount for whatever personal uses that you have. For whatever personal uses, you got reimbursement, right? That reimbursement will be over here. Another way of dealing with this is, hey, instead of putting total reimbursement amount, reimbursement expenses. Instead of putting the total amount, I am only going to put the personal amount. Instead of total amount, I am only going to put the personal amount. So, what expenses will be relevant to personal? Let's see. Out of the home phone, out of 185 pounds, 100 pounds was your personal use. This is an allowable deduction, but here now we're not thinking about allowable deduction. Out of 185, 100 was personal use. For 100 you got reimbursement. So, line rental. As for personal use, 100 pounds is going to be here. Not deducted, 100 pounds only. Any other personal stuff? Subscription to local gym, that's for personal reimbursement that you got, is not relevant to your employment. It is not an allowable deduction, this is personal amount. So, what are you going to do? Subscription to local gym. How much was the subscription? 1,200, damn. 1,200 pounds. 100, 1,200. Understanding? Now we are putting only the personal amounts. We're not putting the things that we're not putting the total amount. We're not looking at allowable deductions at all. We're just looking at personal amounts. Now, the rest of the two are allowable deductions. It's not for personal use. It's for employment purposes. So, you don't do anything. Now we're going to directly check the employment income. Employment income assessable to tax. Oh. Employment income assessable to tax in that tax year. What's going to be the amount? You're going to find that is the same amount. Because the math here is mathing. What does that mean? Out of the total amount, you remove all the allowable deductions, you will get only the personal amount remaining. Out of the total amount, out of the total amount, you remove all of the employment related stuff. What will be remaining? The personal amount. The personal amount will be remaining. Either way, you're going to get the same answer. You can either take the total reimbursement amount and you can deduct this part. That is anything that's an allowable deduction. Anything that's relevant to your employment. You can just deduct it, you will get a personal amount. Another way of doing this is you can directly put the personal amount. Anything you're not getting an allowable deduction, you put it as personal, you're going to get the same amount. Okay, I didn't do anything different here. Out of this total amount, I removed all of the allowable deductions. You got the personal amount remaining. Or this is a direct method. I just directly put the personal amount. Anything that I'm not getting an allowable deduction for tax purposes, what am I going to do? I'm going to put it in reimbursement expenses. I will get the same amount, 1,300. It's either touching your nose like this or touching your nose like this. Same thing. There's no difference at all. Okay. Now you're going to be like, ma'am, which method I should use? Whichever method you feel comfortable is the right method. here the beautiful part about taxation ACCA is that as long as it makes sense, it's allowed. As long as it makes sense. Whatever HMRC is saying, first of all, you need to remember. They said this particular thing is allowable deduction, you can't change the word, right? You can either do it like this, which is what I have done in the exam, because for me, it's easier to take the totals and then deduct it. For me, this is easy. For you, maybe this is easier. You're like, okay, directly I can just put the personal amount. I don't need to do, again, in allowable deduction side, you don't put again allowable deductions. You cannot make another allowable deductions column less allowable deductions, and you cannot again deduct business calls. You cannot again deduct 600 pounds and 500 pounds. That will be double deduction. You can't do that. Either you do this, either you do this. For me, this I found easy. So in exam, I used this. I didn't lose any marks for that. Either way, it's just getting netted off either way. For me, this one was easier. It's easier for me to identify whichever is an allowable deduction. So I did this. For me, this Venn diagram was helpful. For you, maybe this might be useful. This might be helpful. Either way, you're going to get the same answer. 1,300 pounds is the answer. This is a taxable benefit. The 1,300 pounds is your reimbursement expenses. That is a taxable benefit. Alright? Let's look at the next question. Underwood is employed as an insurance salesman on a monthly salary of 950 pounds. What is the salary amount? Let's just highlight certain things, okay, so that we are not missing out on things. See, this is the way I like solving. Whenever you read a question, right, highlight all the important points and make certain notes so that you don't forget. The thing with taxation problems is that they're very lengthy. You might forget certain things and you might end up with the wrong amount. So what you're going to do, while reading the question itself, you're going to highlight certain things. It's a monthly salary. The salary is of 950 pounds. In addition to this basic salary, he receives a bonus that is paid in May each year. Bonus is paid May each year. And it relates to the sales he received. Sales he achieved in the year to previous 31st October. What does this mean, ma'am? This is a commission he is receiving. This is the commission he is receiving. Let's write it over here. What is this? Oh, this pencil. This is the commission he is receiving for his sales. The actual payment of the commission, the actual payment of the commission is being done on May each year. May, he's getting the actual payment. That is, in the bank account, if he checks, he is actually seeing that, okay, this payment is done. But the amount that is related, to which part is it related? The previous 31st October. So, 31st October 2025, that is last year 31st October, till then whatever sales I got. So, if I just have to write it here, 31st October 2024 to 31st October 2025. Whatever sales I have made in this time, I am getting paid May 2026. That is what they're saying. Bonus, okay, it's written here, right? His bonuses are as follows. For bonuses from 31st October 2022 to 2023, he got paid on May 2024. Exactly what I said. From this period, 31st October 2024 to 2025, whatever sales he has made, uska sales, uska bonus, uska commission, he is getting actually paid on May 2026. That's the only thing you have to remember here. And here it is, they have given for 3 years. So for 3 years, they have given the bonuses. That is from 2022 to 2023, he got paid on May 2024, 1,920. Similarly, 2023 to 24, He got paid on May 2025, 1,260. 24 to 25, May 2026, 2,700. Okay, this is important and I'll tell you why. Because we had learned about this. The date of receipt is earlier of actual payment of earnings and when earnings become due. This is the part that gets confusing, but it's not. As long as you understand the question, it is okay. Alright. Now, let's look at the rest of the question. Underwood made the following payments in respect of his employment. Contribution to occupational pension scheme. Let's look at it. Is this an allowable deduction? Let's make a small note here. This is how I like to solve it. Okay. Let's make a small note here. Is this an allowable deduction? Yes. Allowable deduction, I'll write it at AD. Not after death. Right? It's allowable deduction. Subscription to Chartered Insurance Institute. He's an insurance salesman. It will be given in the question, guys. It will be given in the question. All the relevant things will be given in the question. No questions asked. He is an insurance salesman. He paid subscription to Chartered Insurance Institute. Is it relevant? Yes. So, is it an allowable deduction? Yes, absolutely. Payroll deduction scheme in favor of Oxfam. Oxfam is a charitable institution. Under payroll deduction scheme, he is paying charitable donations. Charitable donations under payroll deduction scheme. Is it an allowable deduction? Yes. All of these are allowable deductions. Now we have to calculate their assessable income from employment. Assessable income from employment. We have to see, we have to choose the time that is paid during and when they actually become due. Right? That is one thing we have to remember. Now let's see how we actually calculate it. What is the assessable income? First of all, let's look at each of the things we highlighted. Okay? Let's see each of the things that is highlighted. Let's solve it how you solve it in exams. Salary. Oh, where is this right? Employment income first. Okay? Employment income. First element, salary. They're getting a salary of £950 on a monthly basis. £950 on a monthly basis. So for 1 year, how much is he getting? 950 into 12? £950 into 12 months. 950 into 12, we got 11,400 is his salary assessable to tax. Now we have to check his bonus or commission, whatever you want to call it. Bonus is also a taxable employment income. But the question here is, ma'am, which number should I put? Which number should I put? Alright, that is the question. So what are you going to do here? For an employee, let's put a note. Note 1. Let's just put a note. At the end, I'm going to put a note over here. That, hey, for employees, the date of receipt is earlier of two things. Date of actual payment and when it becomes due date. What is the date of actual payment when it comes to our tax year? They have given for 3 years. We only care about this part because we are looking for tax 2025 to 2026. What is the date? What is the tax year for 25-26? It starts 6th April 2025 and it's ending at 5th April 2026. Right? 5th April 2026. Now, here's the thing. Bonus is for the year related to 31st October 2025. He's actually getting paid May 2026. Is it falling within the tax year? No. May is after April. April, May, June, right? So, he's getting paid over here, 2,700. Let's check now. Date of actual payment. What is the date of actual payment here? May 2026. What is the day he's actually supposed to get paid? 31st October. 31st October 25. What is the earliest of two? October 25. Correct. Now, the thing here is, he is getting paid after the tax year. He is getting paid after tax year 25-26. So this part is not included. It is on a receipts basis, guys. Receipts basis basically means whenever you receive it, or the earliest of whenever you receive it and when it is actually due. Alright, so can I say May 2025 falls within the tax year? Falls within tax year. May 24 is before tax year 24-25. So now can you tell me which part is actually within our tax year? This part is within our tax year, May 2025. Alright, so we have to include here, this is the earliest, right? October 2025 is the earliest. This is the date of receipt. What is the date of actual payment? May 2026. We have to take the earliest. This falls within the tax year. In fact, you don't even need this. You don't even need this note. You can just write an explanation that, hey, employment income is assessed on receipts basis. That is when you actually receive the employment income, the salary, bonus, whatever it is. It is on a receipts basis. Alright, May 2025 falls within tax year of 25-26. So we have to take May 2025 amount of how much? 1260. Is that clear? Notice employment income is assessed on receipts basis. How much ever we receive, that is the amount. May 2025 falls within tax year 25-26. Hence, we put this as bonus amount. Okay. So, it is on a receipts basis. Whenever you get it, that amount is, for whatever is falling within the tax year, needs to be included. Now, let's look at the we look at the allowable deductions. Less allowable deductions. So, what do we have? We have three things. First is occupational pension scheme. You are going to, in the exam, you are going to write the entire thing. Contribution to occupational pension scheme. I'm just going to write it in short here. Pension. Here, subscription. And charitable donation under payroll deduction scheme. So what is the amount here? 342, 100 and 200. 342 is going to be deducted, 100, 200. Simple. After that, we'll get our employment income that is assessable to tax. That is employment income that you put in the pro forma, right? Employment income assessable to tax is how much? 11,400 plus 1,260 minus 342 minus 100 minus 200. How much is that? 12,018 pounds. This is your income that is accessible to tax. Simple. Let's look at the next one. Employee uses her own car for business travel. What is this? It is an allowable deduction and HMRC's mileage allowance. Okay. During the tax year, she drove 13,000 miles on business. 13,000 miles on business. All of 13,000 miles is for business purposes. Her employer paid her a mileage allowance of 30p per mile. That is the only thing you need to remember. Let's highlight the important stuff. How many miles were traveled? 13,000 miles on business. Employer paid 30p per mile. Now we have to see, hey, did her employer pay more or less than HMRC's AMAP? That is what you're supposed to check. What are you going to do? I'm just going to write HMRC's AMAP over here, but you don't need to remember it. It will be provided to you in the exam. What's going to happen? The first 10,000 miles per annum will be 0.45, that is 45p, right? Then over and above 10,000 miles is going to be 0.25. Let's look at how much mileage allowance is an allowable deduction for according to HMRC's AMAP. Okay, 13,000 miles were driven. HMRC's AMAP is equal to the first 10,000 miles is going to be multiplied into 0.45 and the next 3,000, the remaining 3,000 is going to be multiplied by 0.25. Now let's see what is the mileage allowance as per HMRC. What is considered an allowable deduction? 10,000 into 0.45 is going to be 4,500. 3,000 into 0.25 is going to be 750. So that's going to be 5,250. 5,250 is going to be an allowable deduction. But wait, the employer also provided some kind of mileage allowance. Let's see, according to employer's mileage allowance, how much benefit she is getting. How much benefit she is getting according to this. What's written here? The entire 13,000 miles that she drove for business, she is going to get 0.30. So 13,000 into 0.3. 3,900 pounds, she is going to get an taxable benefit. Now we know. What do we know? We know that, hey, if HMRC's AMAP is greater than the mileage allowance that is provided by your employer, the net deduction, there will be a net deduction. So, you are going to write, first of all, what is the question? They asked, hey, what is the expense claim for the tax year? Right? Expense claim for the tax year that can reduce the taxable employment income. What is given here? Let's write a note. We know that if HMRC's mileage allowance approved mileage allowance provided is greater than employer's mileage allowance, then there will be a net deduction. How much? There will be a net allowable deduction. That is, hey, HMRC told that you can deduct a total of 5,250. 5,250 is your allowable deduction. Out of this, employer's allowance, employer's mileage allowance only covered for 3,900. Only allowed for 3,900 pounds. The remaining amount, that is 5,250 minus 3,900, 1,350 pounds is going to be an allowable deduction. (5250) minus 3,900. This amount is going to be an allowable deduction because whatever allowance employer has given you is not sufficient. You have to follow HMRC only. 1,350. Let's look at a similar question just like this and then we will end the class. Okay. Christos has travelled 12,000 business miles. They're saying business miles because, hey, it's relevant to business, right? Personal miles and all, we can't do anything. Anything that's relevant to employment purposes only is an allowable deduction, correct? If you're using your own car for your own use, why will you get a deduction from your employment income? Makes no sense, right? So 12,000 business miles were used and employer pays him 42p per mile. Okay, so how are you going to use this? Again, calculate how much of the mileage allowance is taxable. Okay, so let's look at this. A. Question number A. What's going to be the case? HMRC, according to HMRC's AMAP, the first 10,000 miles is going to be multiplied into 0.45 and the rest of the 2,000 miles, total 12,000, no? Rest of the 2,000 miles is going to be multiplied into 0.25. The amount will be given to you in the exam. Okay, so 10,000 into 0.45, that is 4,500, and 2,000 into 0.25, that is 500. So that will be 4,700. Correct? 4,700. 4,500 plus 10,000 into 0.45, that's 4,500. Let's just write it here, plus 2,000 into 0.25, that is 500. Total will be 3,000. Sorry, I thought it was 200. Anyway, it's going to be 5,000. 5,000 pounds is an allowable deduction. This is the amount that needs to be deducted. However, mileage allowance, employer is giving a mileage allowance. Employer's mileage allowance is 0.42 for the entire 12,000 miles. 0.42 is being provided. So 0.42 into 12,000, how much is that? 5,040 pounds. This is the taxable benefit. Now what they have given here, what do we know from this? That hey, if HMRC's AMAP is less than the mileage allowance that is given, that is the employer is providing you more than you are supposed to, then it is a net taxable benefit. Net taxable benefit. So what does that mean? The amount of taxable benefit is going to be, we can see here that 5,040 is greater than 5,000. So what's going to happen? Taxable benefit is going to be equal to 5,040 minus 5,000. 40 pounds is going to be your taxable benefit. Now, let's look at question B. What's going to happen here? Explain how your answer would differ if Christo's employer paid 35 pounds per mile, 0.35 per mile. Okay, so HMRC's AMAP is going to stay the same, but employer's MA will change, right? Employer's mileage allowance is going to be 12,000 miles, that were 12,000 business miles into 0.35. 0.35 only, no? Yeah, 0.35. So what's going to happen? 12,000 into 0.35, you're going to have 4,200 pounds. That's a taxable benefit. Now, we know that 4,200 is less than 5,000. Simple maths. So there's going to be a net taxable benefit or allowable deduction. There's going to be an allowable deduction. The allowable deduction is going to be 5,000 pounds minus 4,200 of mileage allowance they are getting. So total of 800 pounds is going to be your allowable deduction. I hope this is clear. This is how systematically you solve everything. Alright, in the next class we're going to look at the different kind of benefits. Okay, we're going to look at certain other things as well. For example, if the company provides the car for you, what you're going to do, right? And certain other topics. Alright, and then we'll solve some numericals just like we did today, and it'll be reinforced better. Alright, so yeah, stay hydrated. Thank you so much for attending the class. Hope you all have a great day ahead. Alright, see you all tomorrow. Bye bye.